Hello, Oracles. Today we're going to discuss the dividend snowball. This is a way to get your passive income sped up to a point where you can basically live financially free, time free to do the things that you want and get there in a much faster manner. Before we get into this, just wanted to say that none of this is financial advice. This is just the strategy that I am currently using, and I'm going to break down exactly how it all plays out to see if it's something that maybe you would want to utilize or could help you out in growing passive income for yourself. So many of you know I am a big Tesla bull. Tesla, I think, is going to be the greatest company in the world in the future, and it's building up to that point. So for me, I want to accumulate as many shares as I possibly can. And those of you who have been following me for a while know that I've been working on many things outside of my full-time job to bring in some extra income to be able to invest into Tesla. I've got this YouTube channel, I have Beachbody, I have Patreon, I have a lot of different sources of income coming in to invest. The only problem with that is trading time for money. There's only so much time we have in a day. So I'm trying to figure out other ways to be able to bring in more income to be able to invest in Tesla stock. For me, that came down to dividends and other sorts of passive income. Having my money make me money, that is not trading time for money. So now that kind of removes the ceiling from how much money I can actually bring in. Now, along the course of me going through this, I also had some changes going on to my job, and it made me realize that that full-time source of income could change at any time without warning. So now my passive income is not just coming in to be able to buy more Tesla stock, it's also coming in for me to be able to live my life the way I want and have enough money to not have to worry about if anything happens to my full-time job. And quite honestly, that is true for a lot of people. You never know what's going to happen with your job. And if that faucet gets shut off or turned down a little bit, now you've got to juggle a lot of different things and change your lifestyle and all sorts of stuff. I don't want to have to deal with that. So this is why I came up with this snowball strategy. So I will get into that in just a minute. So first things first, before we get into that strategy, the most important thing to figure out is what are your expenses? Because once you know what your expenses are, you now have a goal for what you're striving for when it comes to passive income. When it comes to passive income, you have to figure out how much money do I need to have coming in passively to not have to worry about having a full-time job. Now, for me, this isn't a thing where as soon as I hit that number, I'm going to leave my job altogether. It's you get to that point where now it's like, hey, now I can assess. I don't need this job. I'm now coming here because maybe it's giving you benefits. A 401k match is awesome. You can't get that from passive income. Maybe it just keeps you busy. Maybe you actually do love your job. A lot of different reasons, but that's a decision that you have to make on your own. But coming up with what you actually need for your bare bones expenses is the number one step. Now, if you are going to be leaving your job, do not forget to add in your insurance because medical insurance, at least here in the US, can be pretty expensive. So you need to factor that in and can't just say, hey, these are my basic expenses, because if your job is covering insurance, you've got to factor that in. So this here is my August income, expense, and investment report. All of my members and patrons get to see this updated on a weekly basis. This is not me coming out here to flash what I'm doing, how much I'm making. This is just to show that it pays to actually track every penny you have coming in and every penny you have going out. This makes the transition in my current job much simpler. And I can see here that my income coming in from my full-time job is just over $4,000 for the last month. And I had income coming in, yes, I call it my FU money. So last month I brought in just under $800 for the month. So now up here I break it all down. So my total income was about $4,800. My total investments were $2,300. So that is out of that $4,800, I invested almost half of it. And then my expenses were the other half. If you are at a place where you can invest 50% of your money, you are in a very good place. Now, it's very important to remember that as your income goes up, make sure your expenses stay the same. And the reason I say that is because the more money you can invest, the faster you're going to speed this entire snowball process up as well. So here, my entire goal is $5,000 per month coming in passively. So I still have a long ways to go, but again, the more I invest, the faster I will get there. And now for me, outside of those expenses that were listed on that sheet, I also have child support that is not on there because that goes directly to my ex-wife. I also have obviously insurance, like I said, is not on there. So if you're going to be factoring in what you need from passive income to be able to live on that solely, you've got to really take a look at your expenses and make sure you do factor in everything to get a true number of what that's going to be. The next piece is you also have to remember about taxes. So when you're paying taxes, for me, that income I showed was all the income I have that's coming in after taxes. That is my actual take home money. That is not pre-tax. That's not my gross income. That is my take home money. And that is after child support also comes out. So I wanted to make sure my numbers that I'm working with are my real true numbers that I can actually live on. So make sure you factor that in as well. Again, anybody who's a member and patron, I can discuss that with all of you guys. I share that on a weekly basis. All right, so now that we've figured out how much money we're going to be needing from our passive income to be able to live on this, now we can take a look at the strategy to get there. Now, a lot of people do say, and it is true, that it takes a long time to build up your dividends to get to a point where you can be able to live on them. That is very true. Even with my strategy here with the snowball strategy, it's going to take some time. So you've got to be patient with it. You have to understand how exponential growth works. Over time, you're going to build this. And again, just like a snowball, it's going to build and build and build. And the bigger it gets, the faster it's going to grow. You have to give it some time. Especially in the beginning, it could seem very, very slow. So for me, I kind of looked at it in reverse. When I was getting myself out of debt, you kind of go through a snowball to be able to pay off your debt as quickly as possible. So you pay off one credit card, you take that money, then you put it into the next one, and then it grows faster and faster to pay your debt off. This is the same exact principle, except instead of your money going to someone else, it is your money making you more money. And that's why this snowball is going to work. Now, a little disclaimer before I get into this full strategy here. The top stocks and ETFs that I have on my list are volatile. They do change and vary on a month-to-month basis, and it could vary significantly. I will explain that in a minute. And now for me, when I did start this whole entire process off, I did start with a large sum of cash. I had been saving up for a couple of years to buy a house, and then as many of us know, the housing market is not the best place to buy right now. Interest rates are high, and the prices of houses are still also very high. So I think it's going to come down. Whether it does or not, who knows? But I had this money saved up, and I had $20,000 saved up to be able to start this journey myself. You don't need that kind of money to get started. Absolutely not. You can absolutely do this with, just a weekly amount. So for me, I had that $20,000 to start, and I was putting in $150 every single week into different stocks that I've been utilizing because that's the free money that I had to be able to put into this. Now, for me, this is money that's going into my main account. So this is going to get taxed. I do highly recommend, and it's not financial advice, but it's a strong recommendation that you put money into an IRA. When you put money into an IRA, you can still do this whole entire snowball effect, and it's going to build up over time, and you do not have to pay taxes on it if it is a Roth IRA. Now, with the Roth IRA, you are capped at $6,500 per year as a single individual under 50 years old. So take a look at that and take a look at the limitations. And you cannot access that until you're 59 and a half, but it's a very good way to build up some passive income for retirement in the future. So today, what we're going to be talking about could be beneficial for both a main account and for your IRA, but your IRA you will not be able to access until you're 59 and a half. So to show you the growth I have seen this year from all of my passive income, I have this little chart made up. So in January, I brought in $38.63. Now, back in January, this is when I started. I put in $20,000 into CDs alone, bringing in about 4.5% to 5% annualized interest. And it was at that moment I realized, oh, this can actually make a big difference. I had that $20,000 in a savings account making me absolutely no money. So let me take a look and see what I can actually do to make money. So hey, $38 was much better than zero. So I continued that into February, and that grew. And again, that cash coming in allowed me to invest even more money. Then it started to hit me that dividends could also play a major role in this. So I started to get into some dividends, and it took me a little while to learn. It took me about 3 months. But as that was growing, I was making more and more money just from my CDs. So April, it really started to grow at 145, dipped down in May just because of the fact that one of my CDs had matured in the following month in June. So that was 172. And then in July, I started to dive heavier into the dividend ETFs. So I pulled in 196.16 and then grew that by 43% to $280.83 in August. So again, this money here isn't life-changing money. This isn't something I'm going to be able to live on, but this is how fast the snowball can grow when you are looking at the right places. And so far here in September, I've had 2 CDs mature for $46, and I am on track this month to pull in almost $500 passively. I'll show you that in a minute. So before we get into this, there are qualified dividends and unqualified dividends. Qualified dividends are going to tax you at a capital gains tax. So for most people, it's going to be around 15%. If it's an unqualified dividend, it's going to tax you as normal income. So make sure you learn the difference between the two and what you're investing in so that you can factor in what you would be paying in taxes if this is going into a taxable account. And so the way I broke my spreadsheet down here is by the stock ticker symbol. And for me, this is the snowball. So I'm really just working from top to bottom, and I do diversify. So while, it comes down to risk tolerance, some people may say, I'm just going to dump all of my money into the top one until I reach whatever goal I'm striving for and then move it on to the next one and down and so forth. For me, my long-term goal is to be able to get to these highlighted ones here. The green are individual companies. The yellow are the ETFs. So this is my way of diversification. Now, many of these individual companies are in these ETFs. So as I work my way down, I'm constantly learning, I'm constantly adjusting. I will most likely consolidate this over time as I really don't need all of these. But at this point in my dividend knowledge, this is what I am sticking with at the moment. So anything highlighted in white, it's not that I'm going to sell it, but once I achieve certain goals, I'm going to stop adding anything to them and take the money that I make from them and move it into the longer term plays that I want to have. So how I broke this down was all broken down by percentage gains. I do not have the percentage in here. Reason being, for at least the ones in the top 15, these fluctuate significantly. So putting a percentage in here, I would be changing it constantly. So the dividends are here. So last month, TSLY, for instance, paid out 83 cents per share. Right now, those shares are trading at $14.41. So that is an almost 70% return on these dividends. So that is almost a 70% return on this. That is huge. Looking at most companies, anything around a 2 to 3%, 3 to 4% is excellent, outstanding. That is what you want to go with for a long-term growth. For these, however, these are strictly high payout month to month. So another thing too, and the reason I have these down here highlighted are these are dividend growth plays. These are things that are going to grow in equity value over time, as well as have their dividends grow over time, and that payout will grow as well. For instance, a VYMI paying out 39 cents per share right now. In the future, 5 years down the road, maybe it's going to be paying 50 cents per share. So that there is something you have to pay attention to and you will learn over time. Highly recommend following myself and many others over on X, formerly known as Twitter, because over there, there's a lot of information you can find out about just this and finding out what companies you would want to invest in the future. But for this strategy here, it starts with high yield because again, you only have so much coming in from your full-time job to be able to add to a VYMI. SCHD is one of the top ETFs out there, and that is making 22 cents per share. Now, the way I break it down here is in order for me to bring in $250 a month passively from SCHD, I would need to have invested almost $85,000. So for me, like, that's a lot of money. I don't have $85,000. And not only that, but $85,000 to bring in $250 a month, that's not money to retire on. It's going to take me a very long time to get there. How can I speed that up? This is where these top 15 plays are going to come in. TSLY, on the other hand, in order for me to make $250 every single month, I already have invested $3,500 and I only need another $800. So about $4,500 based upon today's stock price would get me $250 every single month. That is significantly faster and much more attainable. Then once I reach that $250 will continue to get put into TSLY on a monthly basis. Now again, this dividend could change. This year has fluctuated from 44 cents per share up to $1.06 per share. So again, it's very volatile and you have to pay attention to that. Now, as we come down the line here, I just put it in order of how much money I need to have in here. So you can see that this dollar to goal number here is going to grow because the more money I need to attain these numbers, the higher that's going to be. I also broke it down by $500 per month and $1,000 per month. So right now I am putting $10 every single day into TSLY. As soon as that reaches the goal of $250, I'm going to cut that in half and put $5 a day into TSLY and then $5 a day into KLIP. As soon as TSLY reaches $500, I'm going to move the other half and I'm going to make this $10 per day into KLIP. Then rinse and repeat. As soon as KLIP hits 250, split that into NVDY and just continue that down the entire chain here. Now, obviously, things change over time and you have to be an agile investor to adjust along the way as well. But that is my current strategy. And right now I only need $800 left. So by the end of this month, I will have TSLY to that $250 goal. Then I'll be moving on to KLIP. Now, I am adding at this point $200 a week into all sorts of different ETFs as well. So I am adding to all of these longer term plays at the same time, just because I do like to diversify. Never know what's going to happen with TSLY. Maybe this dividend drops down to significantly lower. Maybe it's 20 cents. Maybe something catastrophic happens. I don't know. So for me, it is definitely a risky play to do this. So be cautious. Again, this is not financial advice, but this is something that I'm trying to work out and speed up the process to get myself to these better, longer term, more stable dividend plays so that I can live off of this passive income. And then this money up here, when it's coming in, it could just be fun money. I don't need to worry about whatever else is coming in. It's just fun money to work with. Maybe I sell it off and move that money into another one. Don't know. Again, that's a decision I can make in the future. So based on my current portfolio right now, I have in all of these stocks and ETFs just over $14,600. With that, I am pulling in $376 per month. Now, I also have my $20,000 still sitting in these CDs. Those are pulling in about $85 a month. So right now, passive income, I have $34,618 invested, and I am making $461.73 per month. And so I broke my goals down to $10,000 per month, $2,500 per week, and $350 per day. The reason I broke it down that way is because that will allow me to live passively and still invest significant amounts of money back into this to grow that even faster. And currently I'm at $107 per week, $15.18 per day, or the equivalent of $2.66 per hour, based upon a 40-hour work week. Now, the other thing to remember too, and what I broke down over here is every single payout. So every payout, so QYLD brought in $3.52 in January, and then TSLY brought in $102.71 in August. So it's important to remember also that equity growth is going to play into this. Just because you're getting great cash flow coming in doesn't mean you're making money. For instance, my TSLY, just because I brought in $196.98 so far this year, the equity value has gone down from the price I bought it at, so I'm actually down $7.19. Does not concern me because on the 18th of this month, I will be getting a payout. Again, don't know what that's going to be yet. We will find out this week, but that will offset this loss. And again, my goal for this is strictly for cash flow, and I'm not looking for growth on this. The highlighted ones down here, those are the ones that I want to see the growth on. That's the one that I want to pay attention to and make sure that over the long term, and I'm talking 5-10 years plus, that is actually growing and making me more money because I do not want to be losing my equity value on that. But for these up here, that is totally fine because it's just going to be a short-term play to get myself up to have cash flow to be able to put into these down below. So overall, with my entire strategy so far this year, my dividends have brought in $454, my CD interest has brought in $651, and my total passive is $1,106.41. And as you can see on both, I am positive on growth as well. So I have not lost any money from this strategy. So I hope this video helped you out. Now, again, just be careful with all of this because it fluctuates a lot. It could be a good way for you to get kind of started in going on this. I like to diversify. I don't like to trust all of my money in one place, but I am starting that snowball at the top. so far in the 3 months I have been doing this, it has been working out very well for me. So I'm going to continue on doing this, and I'll keep you guys posted with an update at the end of every month to let you know how this is continuing forward. You guys can ask all the questions you want in the comments below. I will respond to everything over there. And on X, I will be answering all the same questions as well. Feel free to DM me over there also. I will answer everything as quickly as I possibly can. Again, I'm not a financial advisor. I'm just going to give you the wisdom that I have and the thoughts that I have about all of this, some things that may potentially help you out. And as one of my subscribers, Hanif, says, it is a potential financial suggestion. So not financial advice, but a potential financial suggestion. So take a look at all of this. Let me know what you guys think about it. So far, again, it has been working out great for me. I'm going to continue this moving forward. And then I'm going to just kind of play off of that and see what I want to do for the future, make any adjustments, and I will keep you guys posted on all of that. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.